Back to Fast Market here on the Schwab Network. Let's bring in my co-host back, Kevin Green, Senior Markets Correspondent. And it's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, Vice President of Research at Likefolio. Happy Friday, Megan.
Happy Friday, guys. Thanks for having me.
All right, so we're talking Netflix. Wanted to kind of hit this one. Got a big price target hike today. Another one, I believe they had one yesterday also. Just hit all-time highs. Are you guys still seeing positive data on this one? Because it seems like valuation's getting pretty high for this stock.
You know, it really is. But whenever you are the undeniable best at something, we see that as a pretty good justification for where its stock is trading right now. We look at Netflix in terms of overall mention volume. It blows every other streamer out of the water in our universe, just in terms of the consumer chatter that it's driving. Whenever you consider global subscribers, this is the largest player in the game. Whenever you consider time spent from consumers on different streaming platforms, it's another clear leader. And so I think that kind of the bearish thesis, or the, okay, maybe, you know, we're getting a too high thesis for Netflix, is that there is a slowdown in subscriber growth, and perhaps consumers are feeling a little bit more cautious with their spend. Maybe they're pulling back, maybe they're canceling some subscriptions. But whenever we look at things, you know, while we do see a slowdown in that subscriber growth for sure, which also makes sense as to why Netflix is saying it's no longer going to be reporting on that moving forward. But we don't see signs of consumers saying that they're canceling Netflix. We don't see signs of, you know, consumers that are dropping some streaming services. They're dropping the lower hanging fruit, and Netflix seems to be the one that is a little more insulated right now. So for us, we look at this as a potential long game, nice bullish play, even higher once Netflix really gets its advertising wheels rolling. We think we're still in the very early phases of that. So whenever we look at this, we do expect some potential volatility near term as Netflix sorts out its advertising strategy, builds up its technology stack to be able to deliver ads or allow brands to purchase ads effectively. But once that gets rolling, we see potential upside for not just revenue, but also profit as well.
So Megan, from an international standpoint, are you seeing any of their competitors on an international standpoint actually taking any market share? Because we are seeing, I mean, they still have some pretty strong growth when you're looking at the Asia Pacific markets and the Middle Eastern markets. Are you seeing any type of chatter about them actually losing potential market share in the near term? Because that seems to be a catalyst for them as far as to drive revenue in the future to raise prices on those customers.
Yeah, I think that is the tremendous opportunity for them long term in terms of monetization, is that international monetization, you know, in subscriber growth and also in advertising. You know, I think that's somewhere where obviously Netflix is performing much better domestically. And for us, whenever we look at things, we're mostly listening to English speaking subscribers. So we don't have as much insight globally as a big picture, but we still have, I mean, of all of the streamers that we're counting, no one is even close to Netflix. And whenever you consider all of Netflix's original content, you know, we're listening for those titles too. I think Netflix may be our most mentioned company in our entire coverage universe.
Megan, when you look at, I was looking at this other chart, average time spent per day with select subscription OTT platforms in the U.S. I mean, Netflix, of course, leading at this point. You know, when you look at the comparisons, there's really not any comparisons. They're finally starting to become profitable, some of the other streamers. But with the saturation here in the U.S., is that going to be an issue for Netflix, or is your data just kind of reflective like that Netflix is the one that we're not going to give up as far as subscription goes?
You know, we don't see any increased rate of cancellation mentioned. So I think that from a churn perspective, that's positive for Netflix. We do see signs of slowdown, though, when it comes to new signups. So I think that's one thing that Netflix is going to have to shift. You know, this is a company that's maturing. It's moving past just growth in numbers phase, perhaps, and moving more toward the monetization phase. And I think advertising is a big piece of this. Obviously, Netflix just took a big move by eliminating its basic plan and kind of forcing those users into its ad tier plan, which is a really smart move long term because it produces a larger pool of potential consumers for advertisers to target. And so I think that Netflix obviously sees the opportunity here. It even says that it's in the early phases of its ad monetization game. It's really investing in building out that ad tech platform to allow advertisers to more effectively purchase Netflix ads and target consumers and things of that nature. And so I think that this is a shift, though, in its overall mindset of, okay, now we're not so much focusing on this subscription growth, we're focusing on monetization. And so, we would expect a little bit of volatility in the near term while it figures that out, but we do see long-term potential here because one of the largest themes that we're following right now is there's a really large discrepancy whenever you look at advertising dollars spent and the amount of ad dollars that are spent on traditional cable networks versus the amount of ad dollars spent over the top or streaming. And we think that these ad dollars will flow as the technology and targeting improves, and Netflix will certainly benefit from this for years to come.
Megan, real quick before I let you go. Stock's up, 41% so far this year, just below all-time highs. They don't have earnings till mid-October. What kind of earnings score would you guys have on this one now with it at such lofty levels?
I think that right now we're a little bit cautious with Netflix where it's trading. We would not be surprised to see a bit of a pullback in the coming months, especially as it approaches next earnings. If it's continuing to trade near all-time highs, that's a really high bar that it's going to have to cross. So we would not be surprised to see a bit of a pullback. I would say our score is effectively neutral, but probably a little bit more on the bearish side. But long term, we do see that potential. So this is one that when we do see pullbacks, we would be buyers of those dips. We would accumulate shares because we see this as a company that's still in the early phases of potential growth.
Yeah, and they just did secure a 150% year-over-year increase in upfront advertising commitments that they just announced a few weeks ago. All right, great stuff, great data as always. Have a great weekend, Megan.